Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday, the 3rd of June. Well, there's a continuation of this incredible risk rally actually that we've got in equities and risk appetite generally. Equities continue to run higher. DAX another 2% higher. It was 3% higher yesterday. It's another 2% higher today. We had Wall Street markets, which were strong last night, and futures are positive again, although you would argue a little bit less so than the European moves that we're seeing. But risk appetite is definitely on across the board on Forex as well. We've got the Kiwi dollar, which is performing well. We've got the euro, which continues to run higher ahead of the ECB. We've got the yen underperformance, broad dollar underperformance as well. Dollar continues to slide. That range breakdown implies around 96 big figure area on dollar index in the coming weeks. And there's no real reason at the moment why that shouldn't be seen. And it's interesting that the risk appetite moves are seeing the safe haven plays suffering. You've got gold underperforming. You've got treasury yields which are picking up. And I think that it's a really interesting move that we're continuing to see. We had suggestions that China were beginning to sort of possibly stop their soybean purchases from the US. Of reports in Reuters suggested that, but those have been rebuffed and by the Chinese government, and it suggests and markets took on a renewed jump higher yesterday. We had also overnight the Chinese Caixin PMI, which, sorry, it's not then, it is there, 55. Now that actually is the highest it's been for not a million miles off 10 years. So really strong expansion there of the services sector in May. So it suggests that Chinese economy is getting back on track, and that is clearly going to be a positive for risk appetite generally. This morning we've also seen the Eurozone data coming in above expectations on the revision for the final May data for both services and composite. Also similarly for the UK, above expectations. These are all still in fairly significant contraction territory in May, but they are coming in better than expected, and that also adds into the improvement that you can see in risk appetite. This afternoon we're looking out for initially the ADP number. That jobless number for the ADP could give a steer for non-farm payrolls. It's expected to come in at 9 million negative in May, so that'll be interesting this afternoon. But later then we've got at 3 o'clock all the other data comes out. We've got factory orders minus 14% in April, down from minus 10% in March. Non-manufacturing PMI, ISM, for May at 44. So again, US sort of picking up in terms of the outlook there. Watch out for new orders. That could be an interesting component to give us a steer as well. And also we've got the Bank of Canada rates decision at 3 o'clock, expected to be unchanged at 0.25%. And finally, the weekly crude stocks, an inventory build of 3 million barrels. Well, that's less than it broadly has been, but obviously still in expansion territory, still in build territory, which is not all that great. But the oil price rally, which has been incredible actually, continues to go. It's a really strong move, that move that we've seen on Brent crude and WTI in recent days. Okay, so that takes me up to my chart of the day, which is the DAX. Now DAX, traditional risk on market, and certainly the breakout from 11,247. It's not really looked back. It's formed a strong uptrend, posting a succession of positive closes, bull candles. The only one blocked on the copybook was on Friday's close, but the market, Friday's close, but subsequently the market is shot higher this week. It did have a public holiday on Monday, but the 2 days since have been really impressive, haven't they? Really impressive moves. And you look at the momentum of this move, 71 on RSI, MACD lines accelerating higher, stochastic strong. That move on the RSI 71 has not been up that strong since the impressive run towards the all-time highs of 13,795. So yeah, this DAX recovery is in full swing, undoubtedly. Now, You would also look towards the fact that it's broken out from this consolidation rectangle. That implied around about 1100 ticks worth of upside target. So that implies 12,350 area. So you're not a million miles off that now. And be looking out for the next potential weakness to buy into strength, to buy into weakness, to buy into the support. You've got the uptrend. You've got, you talk about gap analysis, doesn't tend to really feature for the DAX, does it? Because it just keeps breaking out on a daily basis, gapping higher, not really coming back. You'd argue today's initial support, let me show you on the hourly chart. Initial support traded lower around 12,133, but yesterday's breakout high 12,055 is support. Yesterday's traded low 11,850 is also supportive, but it's well beyond all these gaps. So yeah, you're looking to buy into weakness, and that uptrend does come back up 11,665 at the moment, but just doesn't want to come backwards. Anyway, so really strong outlook for equities still. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars, and you can watch our top Trader Talks videos, where we've just done a new one today, which is going to be published, and you're going to get some top trading ideas.